Hello guys, welcome to another video. It's been a while since I made an upload. I think I was supposed to upload on Tuesday and on Sunday, but I couldn't. And a lot has happened ever since our previous upload. Because the last time when I made an analysis, I had a trade from there and then it's been pushed into the upside. And the update that I made in the previous video, for those that ever watched it, I said that because of the trend line that we were having there, and when the price is going up, it's the same whether you're talking about a zone or you're talking about a trend line. The more the trend line is touched, or the more it's being tested, the weaker it gets. And then when the price moved to that, and then it came back and took it out and still continued to the downside. So currently we are here. So I'm just gonna run quickly through this one. I'm not gonna be able to check the other ones that we looked at the other day just to see how they played out. I'll do that on the Sunday video. So for now, there's something that I'm seeing here on Nasdaq. So I just want to show you the setup, and hopefully we'll be able to take advantage of that. So let's get started. So these are some of the trades or the drawings that I made during this week. It's very important that what makes you to be a great trader. It's when the price is giving you something and it's saying to you that there's a chance that it might go up. You must be able to adapt when the conditions change. You mustn't force the market to still go up. You must be able to be versatile and adapt and trade in the opposite direction if the conditions change. That's what makes you to be a great trader. Instead of you just seeing that the price is now going against the initial setup that you had, and then you are forcing it to go up by maybe you're taking buy trades in between saying that it has to go up. No, the entry was perfect. We did go up to at least that strong resistance there, and then when we got there, that's when things changed. I think even on H4, was it on H4 or daily, where we had, yes, from daily you can see we had this, which is what we call it bearish engulfing. That's not a good sign. So when you see things like that happening, you can't ignore them. And from there, the price just moved all the way to the downside. The price was moving nicely to the upside. All of a sudden, we changed to the downside. So you need to be able to adapt and change your thing, your the way you view the markets as the price moves to the upside. Now, I want to take out some of these drawings so that we can try and check if we can't get anything on this one. I don't think the monthly chart has changed. It still looks the same. So what we can take from this one is that the price basically has been going to the upside, but now this past 2 months has been trying to pull to the downside. And this is the resistance, the support that we have on this time frame, which is our monthly chart. So maybe the price is trying to because remember, even if it's going to the upside, I told you that the nice trade, the trend is the one that does this instead of the one that does that. This is very dangerous, this one. So maybe the price wants to do this before continuing with the trend. We will just have to wait and find out. So let's check what do we have on. So on this time frame, there isn't much that we can talk about other than just saying that the price is pulling back towards the support. We'll just have to wait for the price to touch that support, and then we see how it reacts. That's if you're trading on this this higher time frame. It might not even get there, but it's very important that when you're on this monthly, you know where your key structures are. All right, and now we are on the weekly chart, and the weekly chart looks something like this, right? So let me take out all these drawings so that we can start from scratch and just see what's happening. So what we have here is that the price was going in a very nice bullish trend, but all of a sudden, all of that changed when the price there at the top, it formed a bearish pin bar and then engulfed that and then pushed all the way to the downside, and it even broke this weird looking support there. I'm saying it's weird because in the other video that I made recently, I told you that when you're talking about areas of support or areas of demand, it's not always there at the swing low. Sometimes the price, when it's moving up, it can pause there and continue. Some people call it the rally, the base, the actual zone, and the rally. So this base here can also act as a support or the area of demand. That's the very same thing that I have here. But the one that we're having here was not the strongest because it was formed by pin bars. So that's why the price then just went through it. And now we are inside this one. This is a better one compared to the one that we're having at the top there. So we can see that currently the price is inside a weekly support or a weekly demand, which means it can still cause it to go back up, right? But what we saw on monthly was that the price on monthly says we still have some space. Even if it breaks that weekly support, it still has space to go to the main zone. That's where we'll definitely get the reaction. So you need to keep that in mind. It's very important that you try and align the time frame, be able to link the time frames together to say that yes, I'm allowed to look for some buying trades here, but should it be taken out, it means they will be going to the main zone, which is the monthly one. Definitely it's the one inside there, and that's when you're going to get your entry from there. There's nothing wrong in searching for buy trade here. If it doesn't work out or you don't get it and then the price takes out the zone, you shift your focus to this one. There's nothing wrong in doing that. That's why I'm saying you need to be versatile. You need to be able to adapt when the conditions change. Don't just stick to the old setup that made sense when you initially were analyzing. When there's new candlesticks and then the setup doesn't make sense anymore, is invalidated, you move from it, you adapt, sort of update your drawings and the trend and whatnot, then you continue with the new setup. So that's what I'm saying. Right now, you are allowed to look for buy trades from inside there. If it doesn't work out, or if you don't get anything and the zone is taken out, this is definitely where you'll be able to buy from, and it will be a discounted price, which means this will be what you're most likely to get now compared to this. Imagine getting all of this when the price gets to the monthly zone. So that's all that we can mention on this time frame. Let's just put a horizontal line to say that we are currently inside this zone, which is why I'm saying if you search for buy trades, you wouldn't be wrong in trying to get buy trades. I used this candlestick, the red candlestick. I just used the body and the tail. So that's the weekly support that we are currently playing inside. Now we have very interesting structure happening here. So we know that our monthly said there's still some space before we can hit the support. The weekly said we are inside the support. And then, which means that the weekly says you can still try and look for buy trades if you get something. But then when you get to the daily, there's this structure that we are seeing here. What if the structure that we are seeing here is the same thing as what we had here, where the last time when I made the video? What if it's the same thing? Why am I saying that? Remember at the beginning of this video, I said to you that we were having a nice entry there and the price was moving up. But all of a sudden, we saw a red candlestick, that the body of that red candlestick covered the body of the previous candlestick. I'm talking about this structure here. This is a very, very, very structure that you cannot ignore. This is bearish engulfing, which basically means that all of a sudden the bears became too stronger than the bulls, and then they reversed the trend and swallowed their price action, basically, if I can just put it like that, which is more or less the same as what we're having here. The bulls tried to find ground or the support or the floor within this weekly support, and then they've been pushing up, and then they pushed up until they all of a sudden this candlestick is going to close. All of a sudden we are having this, which is what I was talking about. This is the same as that, which is what bearish engulfing. So what if this is a structure that will keep the bears shooting to the downside and then eventually take out this support? But we will never know. This is the daily structure. Weekly says we are inside a support. So the daily is going to have to work even harder if it wants to defeat the bulls at this zone. If it was daily versus daily, maybe they will take it out easily. When you compare this, even though the structures are the same, that's what I'm saying, you need to be able to link the time frames together. When you compare this to this, the structures are the same, but the difference is that this one, we didn't have any weekly structure pushing against it. The weekly structure was down here. We didn't have anything because when it was formed already, we had taken out that weird looking support, right? So currently, this one, yes, is a bearish engulfing, but the location is working against it. For this bears, the bears on daily, they're showing some nice strength, but because we are at the weekly support, they might not make it. Yes, they can take it out and then maybe go all the way to the support that we saw on monthly, but there's already odds playing against them. So the price can go to the downside, but it can also go up because these bulls here, they will try to defend their weekly support. So that's all that we can say with regards to this one, because even the trend line, it hasn't been taken out, if we're being honest, because we can draw a trend line maybe from here and then draw it like this. Or even if you want, you can start it there and just put it like that. So the trend line, I would say it hasn't been taken out because yes, it looked like we went to the other side, but we did not play outside. You know, when you want to take out a trend line convincingly, you have to do this, go to the other side, and even if a candlestick there that does not touch this, that's when we'll be convinced that you have defeated that trend line. But in this case, the bulls just went up and fell short of that resistance, and then the bears forced them to go down. So they didn't play outside. So the trend line still surviving. So we need to just watch out and see how the bulls react there, because of what they were showing strength from their weekly support. All of a sudden the bears are back. So let's see how they're gonna respond there with the next candlestick. But you are still allowed, if you're getting some nice trades to go to the upside with confirmation, you can do it. I'm saying with confirmation because of what this is not looking good. You cannot just go in blindly with the limit order because of what there's also some factors that are working against you. Yes, you are located nicely at this support, but what is this? The last time this happened, we saw structure like this, we know what happened afterwards. So that's why I'm saying we can't ignore it. And even here it happened also, even though it was not very strong. We had the same thing and it still managed to push all the way until there. That's the bearish engulfing I'm talking about. So that's what I'm saying. Because of the bigger zone, the weekly, you are allowed to search for buy trades, but you need to get some confirmation because of what? Not everything is pointing to the upside. This guy is telling us something else. We might have maybe price going deeper into the zone. We'll never know. But we are still within this bigger zone. We still can search for buy trades with confirmation. So let's check our H4. I think H4 is the one where we got, you could be trying to look for that buy trade. So now H4, I don't know, maybe the price action on your time frame, on your broker looks different in terms of the candlesticks. The structure and this will still look, the layout will still look the same, but the type of candlesticks we are having might be different. So in this case, the price here is sort of bullish. I know when you look at this, you're saying that the price is bearish. On this time frame, it's bullish, unfortunately. On on H1, you'll find that it's bearish. So this one is bullish. And when did this bullish move start? The bullish move started when the price found ground here, and then they pushed up, they took out the resistance, and they took out the trend line. As you can see, they even had multiple candlesticks outside. So that's when the price became bullish. And all of that, like I said, was initiated by this zone here. This zone that we are currently playing at. This support is the one that initiated the whole move to the upside, breaking the trend line and breaking the resistance. Is the zone that made the structure to change from being bearish. It's been going to the downside for a while to being bullish. But now, that's the structure that, that's the zone that it's very strong because it could push the price up and accomplish, breaking the trend line and breaking the resistance. And so that's why I'm saying it's very strong. You can try and search for trades there. But again, like I already mentioned when we were looking at the daily, I said you can't go in with the limit order. You need confirmation. Your trade has to be with confirmation because the zone, yes, it has accomplished a lot and it's located within the weekly, but not everything is working in its favor. The first one being the one that I already mentioned, where I said that the daily is having a bearish engulfing structure. That's not good. And another one, we can see it on this very same time frame. This zone that we are marking, it's not a good zone because of what? It's formed by pin bar. So a zone that's formed by a pin bar is not a nice zone. So you can try with confirmation because of you being located within the bigger time frame, the weekly one. but we need confirmation. This is not a good zone, and we seem to be having a bearish engulfing on daily. You need some confirmation. So that's why I can say that in this one, this zone, you just mark your zone there using the candlesticks there at the swing low, and then you're trying to buy, but you wait for confirmation. Somebody can ask me and say, what is this thing that I can use? What's this confirmation that you're talking about? It's up to you how you want to take it. So I would say the one that you can trust, the most reliable way to wait for confirmation is when you have identified the zone. Remember, waiting for confirmation, you can't wait for confirmation if you don't have an area of interest. So in this case, you have identified your area of interest to be this support there, and now the price has tapped into that support. Then you are now saying, okay, I've arrived at the area where I was interested in. I just need to look for confirmation and try and execute. So the confirmation, the most common and reliable way to take a buy trade would be to wait for a candlestick that looks like this. I already made a video on this one. I think the two videos that I made recently, one of them was talking about the different pin bars and what each means. So this is a bullish pin bar, which basically means that when this candlestick was formed, at some point the price moved all the way down there, but before it closed, the bulls became so aggressive such that they forced the price to go up and close there and then form a body that is smaller because the price closed around where it started. That's why we're having a long tail below. So the bullish engulfing because the bulls are rejecting the price. So because of how it was formed, the bulls rejecting the price, this you can use it as a confirmation because it's saying to you that the bulls are becoming aggressive. So if you're taking a buy trade immediately, this pin buy is confirmed, then that would increase your chances of winning, because if the bulls are becoming aggressive to a point where they are forming that pin bar, they could continue with their aggression and still continue at least to reach that. So that's the first one you can use as a confirmation. Another one would be the very same structure we are talking about, which is bullish engulfing. This also is a sign to say that the bulls are becoming aggressive. I've explained this one. I can't explain it enough because I've been talking about it ever since I started with this video. So another one would be bullish engulfing. That's also a structure that says the bulls are becoming aggressive. You use that one also to take your buy trade. So when you're taking those trades, you'll be targeting this. This is the minimum area where you are targeting. Keep that in mind. And then I think I can end it there. We can just conclude by saying that where we are currently, there's a chance that the price might react, but we need to keep in mind and not just jump in without waiting for confirmation because of that bearish engulfing on daily, and also because of the H4 support or the demand that we're at not being the strongest. So we need to try and wait for confirmation before we take the trade. Or maybe let's just do H1 and see if we'll find anything. H1 does not have anything. H1 was going to the upside, having a bullish trend line being removed, and the price going back to the resistance, if I can put it like that. Going back, remember the trend line was here. It was removed because of this resistance being strongest and pushing the price to the other side of the trend line. Then it went up to the same resistance, and then the price shot to the downside. And currently we are inside the weekly support, the H4 support, and there's nothing happening here. There's no confirmation as yet. If you want, you can look for your confirmation on this time frame. And the confirmation, like I already explained, you can use the bullish engulfing, you can use the bullish pin bar. Those are the two structures that you can use as your confirmation. I think there was a comment I got and someone asked me about how do we enter a trade. I think that's a very broad question, but if I can try to answer it within 2 minutes, I'll say to you that I think it will depend on the strategy or the concept that you are using. But so I'll just try and answer you from the view of the using the knowledge or the style in which I'm using, right? So the best option would be when the price is coming down to your zone. Remember, you do your analysis in advance and then you identify your areas of interest. Let's say using this, let's just hide some of the information and say when you were opening your chart, the price looked like this. We didn't have those strong candlesticks to the downside, right? And then you are analyzing your chart, and then you conclude by saying the trend here is bullish, which means that we are in an uptrend because we already broken the trend line, we already broken the resistance. We are bullish, and then we just look for the support, because remember, when the price is bullish, there are only two structures that are very important in that trend that you can use to search for your trades. That's a bullish trend line, and that's a support or an area of demand. Why are we saying they're important? It's because these are the only two structures that in a bullish trend they are being respected, because the resistance is being taken out, the bearish trend line is being broken, as we can see in this case. So we need the structures that go with this trend, which is your bullish trend line or your support, right? In this case, when the price is still up there, remember the price is here, we don't have a bullish trend line as yet, and the only support we have is the one at the bottom, which is the one that initiated the whole trend. So there is your support, and there is your trend being bullish. So you know that the price is going up, and there is the key structure that goes with this trend, which is the support. So now you have got an option to say that this structure is very important, and I know if as long as the trend remains bullish, this structure is going to be respected, which is why I'm going to take a buy trade from this support. Then comes the point where you're saying, how am I going to enter? That's me trying to answer the question. First option of you entering this trade would be with a limit order, or a buy limit. Basically, a buy limit means when the price is still up there, you just go and say where the zone starts, which is here, you're just gonna go and put a pending order. You put your buy limit there, and then just outside the zone, below the zone, you put your stop loss. That's how you enter. That's your buy limit, right? The second option will be the one where you're saying, I don't trust this zone because it is formed by a pin bar, and maybe because, yeah, let's say it's formed by a pin bar, and then that's the reason why you don't trust it. You're going to wait for confirmation. Wait for confirmation will mean that when the price is inside the zone, if let's say you get your pin bar like I already explained, then you can go and enter what? 2.1, right? You can enter instantly, which means that as soon as that pin bar closes, as soon as that pin bar is confirmed, you can enter manually, enter at that moment, right? Or you can go and say, okay, the pin bar is confirmed, it looks like this, but now I want the price to play above it. Then that would be a confirmation to say that now the bulls are taking off. So which means you can just go and say, just above the pin bar, I'm going to place a buy stop. So the pin bar is there, then you put your buy stop, and then that's the third way of entering. So those are the three different ways in which you can enter a trade if you are going to use the strategy that I've been showing in these videos that I've been making. So you have got an option to enter with a limit order or a pending order. You just plug the pending order in advance and just say whatever that happens when the price gets there, I don't care. I'm just anticipating that the price will just tap into the zone and then reverse. Or the second option would be, but that's a bit risky. I'll wait for the price to tap into the zone, then I observe the price action inside there. Then if I get a pin bar or engulfing, I can enter. Another one would say that those ones will still not be enough for me. I want the price to break the range, which means I'll place the buy stop just above that structure that is sort of the confirmation, or that so shows that the bulls are becoming aggressive, which means you can put a buy stop just above the pin bar. Then off you go. So those are the three different ways in which you can enter. I hope the guy that asked the question, I hope you are answered. And as for everyone else, just look out for the price action within the current H4 zone, because it's going to be very interesting. You can get a very nice buy trade there with confirmation. If it doesn't come, keep in mind that it will mean that that bearish structure that we saw, bearish engulfing on daily, is trying to become more aggressive, and then maybe possibly take out that weekly support and then go for the bigger one, which is the one on monthly. So that's the structure currently on Nasdaq. Let's just wait and see how it plays out. I'll bring another video on Sunday, and we can just check how it played out and then prepare for the week ahead. All right, thank you. Don't forget to subscribe there if you haven't subscribed, and share the video or the channel with other your friends maybe who are also interested in learning how to trade. And then, because you can see I'm trying to make it as simple as possible, so that I don't want to complicate anything. I want everyone to be able to follow and yeah, follow through and then come up with your own setups using the same strategy. All right, thank you.